Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope, as always, you're having a fantastic weekend. Last week was a bit of a boring week. We corrected in pretty much all of the markets we looked at. So in today's video, we're going to have a quick look back at last week, what happened last week in the markets, why it happened, and what does it mean coming into this week. And when we look at the scorecards today, there's quite a bit of information embedded in those scores heading into next week. So with that said, let's get into today's video, starting with a brief look at the economic calendar because there are a couple of important events coming up. We do have an interest rate decision out of New Zealand on Wednesday. So in terms of the New Zealand pairs, I will only be focused on trading the New Zealand pairs that we're looking at in today's video from Wednesday onwards, because we know statistically you're probably going to get the New Zealand pairs doing nothing into this interest rate decision, and then the opportunity is likely to come from Wednesday into the back end of the week on the New Zealand pairs. We also have a bit of preliminary GDP data coming out of the US, but because it's later on in the week, this is not really anything we need to plan around, but that can affect the markets. And I think you're going to see some volatility around this. But again, as I said, not something we really need to plan trades around. And if we just jump ahead a week, you can see we also have coming up, not this coming week, but the following week, an interest rate decision out of Canada. Now, last week, when we look at the scorecards, you'll see we had a softening of the Canadian dollar. In fact, CAD strength, relatively speaking, was something I was looking at last week. And it may be the case that the CAD pairs continue to consolidate or correct into this interest rate decision. Now, if that's the case, the CAD pairs are not going to be preferable markets to be trading over the next 2 weeks, because if there's no volatility and they just correct, very much like we had last week, there's no real trading opportunities in those pairs. So just something to bear in mind. We will look at the CAD pairs, but because of this, I would not go too crazy with risk in the CAD pairs. I'd probably only be looking to trade one if a nice setup appears in any of the CAD pairs that we look at today. So apart from that, there's really nothing else we need to pay attention to. We do have non-farm payrolls that week as well, but nothing we need to pay attention to heading into next week. Okay, so looking at the scorecards heading into next week, and there's quite a bit of information here. Now, the first thing to note is that, generally speaking, the market's corrected last week. And when you're looking at the scorecards here, we tend to have three outcomes of the scorecards. The first is a winning week, which is where the markets move in the direction of the scorecards projecting, and that happens usually within the week. The second outcome is what I would term a corrective week, which is where, very similar to what we had last week in the US dollar, the market doesn't move in that direction that single week. However, the bias is unchanged and it tends to move in that direction after maybe 2 or 3 weeks. And the reason for that is just because it engages in a larger correction, or it corrects to a high degree or on a high time frame. And the confirmation of a corrective week is, or tends to be, what we're looking at here, which is where the US dollar has corrected and pulled back, but it retains its score. It hasn't actually weakened overall in the macro framework. And this is telling us that the probabilities lie with a continuation to the upside in the dollar, and we should be treating the pullback last week simply as a better opportunity to get long in the US dollar. And the third outcome really of the scorecards is when you have a reversal week, or the market or markets change in the opposite direction to what we're looking at. And that tends to be confirmed by what we saw in the Swiss franc. Last week we were kind of bearish and we have now flipped to neutral, but you can see the score itself has increased. And this is a warning going into next week to say, yes, we should be still looking to retain that bullish bias in the dollar. However, in terms of Swiss franc weakness, we should now be reconsidering that. And so Swiss franc shorts are off the table for me heading into this week. And in fact, when we go through the markets themselves, because we have some momentum in the Swiss franc moving from right to left, I am prepared to look at a couple of opportunities, namely pound franc, New Zealand franc, and also euro franc. But the slight issue with the Swiss franc heading into this week, although I'm prepared to look at those markets on a relative basis this week, the Swiss franc itself, as we will see in a bit, very much like the Canadian dollar we looked at previously, it's not strong in and of itself. It's just currently strong relative to other currencies. The second thing to notice here is that the euro has actually decreased its score from neutral to -1. And we discussed this in previous videos, that the fact the euro was kind of neutral and the dollar was strong, those two things don't really go together, and one of those has to give. And we were kind of preempting in previous videos the euro shifting from a more neutral position down towards a more bearish position, and that the dollar strength was going to hold up, not the near-term euro strength. That has been the case, and so again, very much like the dollar remaining +3, this just is confirmation going into this week of holding that dollar long bias and continuing to hold that euro bearish bias heading into next week. And the final thing here really to note is that the pound has weakened from -2 to -3. So this is confirmation, again, even though the pound pairs corrected somewhat last week, we should still be holding that short bias, unlike the Swiss franc. And we also had the New Zealand dollar weakening. However, just bear in mind we have that interest rate decision. So I'm really only going to trade the New Zealand pairs from Wednesday onwards. So that's really just unpacking what took place last week. We actually had a combination almost of a corrective week in terms of the dollar and the pound and also somewhat the euro pairs. But the Swiss franc pairs are something we should not really be looking at shorting going into this week, in my opinion, and also potentially even reversing that bias if we get some good opportunities in those pairs, which we're going to look at. So to summarize here, the US dollar pairs are still the best long positions. The pound pairs are still, in my opinion, the best short positions, and we should just treat those corrections in those markets last week as a better opportunity to get involved in those and just be patient. Instead of those markets moving in 1 week, maybe they move next week or they move over the next 2 weeks. And you can also see outside of that, there is really less opportunities in the markets heading into next week. And this will be reflected in the best pairs highlighted when we look at the markets themselves. And you'll see really my main focus is going to be on those dollar strength plays heading into next week. Okay, so let's have a look at the individual currencies first before we move on to the markets next week. And start with the dollar. You can see the dollar just corrected 1, 2, 3, 4, 5, and we actually pulled back to the major breakout level of the 102.992. So as it stands, really, this is just a pullback and a retest. This retest here was so close that this is really just, if you look on the bigger picture, we're going to look at the weekly in a second, but this was more just a candle wick, whereas this is more of a pullback and a retest. As it currently stands, the macro scorecards are clearly telling us to remain bullish, and they've kept us on the right side of this all the way throughout this year. But looking at this in the daily chart just allows us to look at the bigger picture. You can see quite clearly this is just a near-term correction here. And so I think patience is required on the dollar, and I do still favor dollar long positions because this market is technically bullish as well as being fundamentally the strongest currency heading into next week. And you can see just quickly, if I zoom out to the weekly here, this was the major breakout level, which we started to pull back and retest. And one down candle or one red week does not a trend change make. So really just underscoring here that what took place last week was a larger correction back to retest the major breakout level of the 102.992. And I am going to be looking for opportunities to the upside in DXY as my priority and the main place to be making money next week. Next is the euro. The euro also pulled back as we had the pullback in the DXY, but you can see this is quite telling. The euro itself has still not breached the major breakout level we've discussed in previous videos of the 1.06710. There is no chance of the euro making any major reversal to the upside unless it can get back above the 1.06710 significantly. And as it currently stands, that is not the case. Maybe we come back and retest this next week, but I see no reason to change the bias. And in fact, when we look at the macro framework, we actually had a weakening of the euro. And when you have technically a market correcting like this, and at the same time, the scorecard is doing the opposite, the vast majority of the time, that market is going to resolve itself in the direction of the forward-looking scorecards. So I am bearish on the euro, and I'm viewing this just simply as a pullback and a better opportunity to look for short positions. Next is the pound. The pound has also corrected, and again, I'm just simply viewing this as a near-term bear flag, and any continuation is viewed as an opportunity to look for a reversal down to the 1.2081. And this move down towards the next target will, of course, be reflected in the pound pairs themselves. Next is the Swiss franc. Now, this is what caused a slight issue last week because we were looking at the Swiss franc to the downside. However, the market, because it had such a steep sell-off, we had a very sharp reversal. This kind of V bottom does not happen very often in the markets. So I still only view this as a near-term correction in the Swiss franc. However, because this is so sharp, if the Swiss franc continues to correct like this and other currencies like the pound do this, then you're still going to see markets like pound franc moving to the downside, even though when you compare this to, say, the dollar, the Swiss franc is not a particularly strong currency in and of itself. So this is why I will be looking at some of the franc pairs like pound franc to the downside, New Zealand franc to the downside, euro franc to the downside, on the basis that if we get a continued correction, the Swiss franc will relatively outperform those currencies. But just bear in mind, it's not highlighted as one of the best because this is not showing inherent strength like the US dollar is. So that's why the dollar pairs are highlighted in gold as the best pairs to look to make money next week, in my opinion. Next is the yen. I highlighted in previous videos that the yen has broken the major breakout level here, and this is just simply correcting as it stands, and we're in all likelihood going to come back and retest the major breakout level before potentially continuing lower. So although this is kind of bullish to neutral, I don't think the yen is a great place to be long because first, a corrective move tends to be, as the name suggests, corrective. You don't get strong impulsive moves in that direction, and so any moves in the Japanese yen pairs, for example, they run the risk of being kind of choppy and corrective, reflecting what we're seeing here. And the second reason I'm not enamored with Japanese yen long positions, despite the fact we have some near-term strength here, is because of the BOJ and their super aggressive bond buying, which of course is in and of itself devaluing the yen. So A, any yen long positions are corrective. B, they fly in the face of the actions of the BOJ. So I would still personally prefer to wait for the scorecards to resolve one way or the other for the Japanese yen because they're currently neutral. And then we start looking at the yen pairs again. Next is the Canadian dollar. Now, similar to what we just discussed in the Swiss franc, we've been looking at Canadian dollar long positions, and actually they've been working very, very well up to last week. Last week, the Canadian dollar softened for the first time in the scorecards, and the CAD pairs we're looking at just corrected. They didn't go anywhere. And heading into this week, you can see we may be set now for the next leg down in the Canadian dollar. If that's the case, along with the fact that the Canadian dollar score has softened and we have the interest rate decision coming up in 2 weeks' time, we can look at the CAD pairs just on a relative basis, but they go right to the bottom of my list, even less interested in the CAD pairs this week than the Swiss franc pairs, and the Swiss franc pairs, as we just looked at, aren't even particularly strong. They're just a relative play. So we will look at the CAD pairs, but just bear in mind everything we've discussed. Maybe I will be looking at taking one good position in the CAD pairs if the opportunity arises, but not much more than that. Next is the Australian dollar. The Australian dollar is forming a classic bear flag here, and this correction looks like it's going to come to an end before further declines. That would be reflected in Aussie dollar to the downside, so I am going to be interested in looking at that, although I prefer the others because they're weaker. And the New Zealand dollar, finally, also displays the same kind of bear flag characteristics. But just bear in mind we have that interest rate decision on Wednesday, so what I would like to see is either the market comes out, rallies on Wednesday, and then starts to roll over like this, in which case I'll be looking to be short, or the market corrects and then on Wednesday you get the break out like this and you get strong move in the direction, and then that opportunity will arise from Wednesday onwards as well. So I like New Zealand shorts, but we'll have to be looking at those as interest rate decision trades from Wednesday onwards next week. Okay, so let's move on to the markets themselves. Where are the best opportunities, in my opinion, heading into next week? Last week, we took out the target in crude oil at the 11388. And so think about this. We took out the target. We were correct in the forecast of crude oil. And yet, with a strong relative score, the Canadian dollar still failed to perform last week. So why is that? Again, this just tells me that this is most likely money coming out of the Canadian dollar, volatility being reduced in the Canadian dollar before the interest rate decision in 2 weeks. So in all honesty, I mean, I like to put more markets in here for a bit of variety and mix things up. The chances of me trading the CAD pairs, personally speaking, next week are very slim. If you want to trade the CAD pairs, when we look at them, it's entirely up to you. I almost certainly won't be taking trades in the CAD pairs. I'll almost certainly be focused on trading these dollar pairs here and perhaps pound franc. The CAD pairs will come into play almost certainly once again once that interest rate decision takes place, not this week, but the week after. So any pullback here in crude oil is simply viewed as another opportunity to look for bullish setups into the 118.20. Next is pound dollar. Now, when you have these corrective weeks where the markets don't really reverse, but they just continue to correct, it's really a double-edged sword because yes, you don't get the opportunity necessarily to trade nice, strong, impulsive moves that week, but what the market's doing is it's actually pulling back to better prices and it's giving you much more downside reward if you can be patient and wait for a week or two. So heading into this week, based on everything we looked at in the scorecards, I still prefer pound dollar shorts as my best play heading into next week. Any continued pullback is going to be viewed as an opportunity once again to look for bearish reversals. And I'm going to be looking first of all down to the previous lows and then onto the 1.2081. So pound dollar shorts are my number one play that I'm going to be focused on next week. Next is euro dollar. Euro dollar corrected last week as we had the correction in the DXY. And again, as this market corrected, we had the euro weakening the scorecards. That is a bona fide sell signal from the scorecards when you have the technicals doing the opposite. As I said, the vast majority of the time, not always, nothing's 100%, but the vast majority of the time, the market will resolve itself in the direction of the forward-looking scorecards. So any continued pullback in euro dollar, perhaps we come back and retest this level once again, who knows? But any pullback is considered another opportunity to look for bearish reversals and a breakout of this trend, or this counter trend, I should say. And any reversal is going to be viewed as an opportunity to start to look for shorts into the 1.0341. My third favorite play is New Zealand dollar. New Zealand dollar is also just correcting in this bear flag over here. And any continued pullback is viewed, and I expect New Zealand dollar probably to do nothing between now and Wednesday. What I would like to see then on Wednesday, we are expected a potential interest rate hike, which of course you would think theoretically is bullish for the New Zealand dollar because it is in theory. However, very often you can get the markets discounting these moves. And if this move up here is discounting that interest rate rise, then you can very often see the opposite come out. So you can see the market, let's say the Reserve Bank of New Zealand hikes rates next week, but what happens is you get a whipsaw and then it breaks lower like this. And that opportunity from Wednesday onwards, if we get this sell-off breaking out of this counter trend on Wednesday, I'm going to look for a pullback and I'm going to look for shorts into the tail end of next week down to the 0.6158. So that's my third favorite pair heading into next week. But as I said, I'm only going to be focused on this from Wednesday onwards. This is an interest rate decision setup, and I like to wait most of the time till after that takes place and trade the follow through. That's when you'll have the least amount of risk. Next is Aussie dollar. I do also like Aussie dollar. I think there's a good chance we continue down to the target at the 0.6812. It's not highlighted as one of the best simply because it scores as kind of bullish to neutral in the scorecard. So I much prefer pound dollar, euro dollar, New Zealand dollar, but I also think there's a good chance. I mean, if these three come down, almost certainly we're going to see Aussie dollar coming down as well. So any continued pullback in Aussie dollar is simply viewed as it currently stands as an opportunity. You can see we're retesting over here to look for bearish breakout. I'm going to be looking down towards the next key of support at 0.6812. Okay, so moving on to the Swiss franc pairs. And again, just bear in mind, you're playing a relative game when you're looking at the Swiss franc pairs here, same with the CAD pairs. And so they're not as good opportunities as when you have an outright strong currency versus a weak one. That's why this is my preferred set heading into next week. But pound franc is an interesting one because we had a very big sell-off to the downside. And you can see we actually have a major range in pound franc, and this is in an overall downtrend. So this kind of momentum, I mean, any pullback in this area is going to be viewed as an opportunity, or should be viewed as an opportunity to look for a bearish breakout down towards the next key of support to the downside at the 1.1913. Out of all of these other markets outside of the dollar pairs we're going to be looking at, pound franc to the downside is probably my number one, let's say, alternative setup outside of the best pairs next week. Next is New Zealand franc. It's highlighted in blue because it's an interest rate decision next week. And any pullback in this market is viewed as an opportunity to look for a bearish breakout. Say we get that bearish reversal on the interest rate decision itself. I'm going to be looking down towards the next key of support to the downside at 0.6169. Now, usually with interest rate decisions, we look for setups both ways. Going into next week, I'm only really interested in New Zealand short positions. If it comes out the opposite and we get a really strong rally and these markets reverse, I just won't trade the New Zealand pairs at all next week. So I'm either short New Zealand pairs from the interest rate decision, or I'm going to be doing nothing in the New Zealand pairs next week. Next is Euro franc. Euro franc is also an opportunity that can be considered next week. Really strong momentum to the downside. Any pullback in this area would be viewed as an opportunity to look for bearish reversals into the 1.0214. And last, and in this case also least, the CAD pairs, because of reasons discussed. Any pullback in this market continued is going to be viewed simply as an opportunity to look for further declines to the downside. we're going to be looking down to the 1.5737. Next is New Zealand Cad. We are also correcting, and again, you can very often see this being discounted, or this is the discounting of the interest rate decision next week. So any break lower like this on the interest rate decision would be considered an opportunity to look for shorts into the 0.8016. But the question has to be asked, if you do get this breakdown, then why not trade New Zealand dollar or even New Zealand franc over and above New Zealand CAD next week? That would be my personal preference. And finally, we have EuroCad. Now, the interesting thing about EuroCad, I actually like EuroCad to the downside. I mentioned this last week, keep an eye on this market. I think there is really quite a strong probability of further declines in this market. But the question is, are we just going to correct into that Canadian interest rate decision for a couple of weeks and then on that interest rate decision breakdown like this and start to get the bigger move to the downside? So I do still think, as I mentioned last week, EuroCad is a really good short, but it just becomes a question of timing. We may have to wait until that Canadian interest rate decision, not this week, the week after, before we get the big breakdown in EuroCad. So I like EuroCad. I would be focused on shorts, but for next week, maybe you just have to be a little bit patient on this market. But keep this one in mind, because I do think we're about to see further declines in this market in the next couple of weeks. Okay, so wrapping up with gold, silver, and Bitcoin. If we look at the gold-silver ratio, you can see, although I'm bearish on both gold and silver, I am still preferably bearish on silver. I prefer silver shorts over gold shorts. Gold is outperforming silver currently, and it does look like it has further upside as well. So I favor silver shorts heading into next week still over gold shorts. If we look at gold, gold really just corrected like a number of the dollar pairs last week away from its target, and I am just still viewing this simply as a better opportunity to start to look for a breakdown in this market. And once we start to reverse, that is going to be the opportunity to start to look for shorts into the 1780.35. Next is silver. I've highlighted silver with a gold tab to highlight the fact that this is one of my preferred setups heading into next week. What I really like about this is the 2145 was the major breakout in silver. It has come back and retested this, and what actually happened was it broke above it last week, pulled back and tested it, and it started to trade away from this level. Now, the reason I like that is because there are clearly, to my eye, a number of traders here who are likely to get trapped if this continues lower, and the people who bought this kind of pullback to this major breakout level, they're all going to be trading with stop losses here. And so next week, what I see is a very good setup. If we start to break down back below the 2145 in silver like this and take out the low, you're going to see these people start to capitulate. You may see a small relief rally, and that would provide a nice head and shoulders setup in silver, and that would be the opportunity to come down to the 1966. Even better if it breaks lower like this and the right shoulder simply pulls back to retest the 2145. That would be a great setup into the 1966. So look out for this next week, but any break lower of this counter trend rally and also the 2145 is going to be an opportunity to start to look for shorts in silver, in my opinion. And last but not least is Bitcoin. I did highlight in previous videos the major breakout of 32,935, and I said in previous videos Bitcoin is in trouble. I've been short Bitcoin for a while here. And heading into last week, we did sell off hard towards the 24,307 target, but we kind of wicked here and we pulled back. The market is now correcting underneath this major breakout level, very similar to the euro. There is going to be no major reversal in Bitcoin unless it can get above the 32,935, because this is a major break to the downside. That has to be reversed for any larger uptrend to take place in Bitcoin. So any pullback in this market, perhaps we even come back and retest the major breakout level, but any pullback is simply viewed once again as an opportunity to look for shorts into the overall target to the downside at the 24,307. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.